It's time now for today's strategy session. Watching Nvidia ahead of earnings on Wednesday. Take a look at this chart. It shows the median return on the stock, depending on how long you hold it before the earnings report. Buying the stock just 1 day prior has a median return of 2.3%. Joining us now on this, Nancy Tengler, Laffer Tengler Investments CEO and CIO. Nancy, always great to chat. How are you thinking about Nvidia ahead of its earnings report? Have you changed any of your positioning at all?
Well, Madison, thanks so much for having me, and happy Memorial Day weekend. We added to the stock during the tariff turmoil, and so we picked it off at a pretty nice level, dollar cost averaged our positions in. But I still think you want to own this stock for the very long term. This is a company that's central to the AI revolution, obviously. And what we've learned from the deep fake, as I call it, is that the hyperscalers in the U.S. companies are doubling down on CapEx, and they are still investing at a really rapid clip. And so this is a name that I think you want to own and take advantage of if they do disappoint on margins and the market isn't expecting that, which is what we expect.
What do you need to hear from NVIDIA to clearly signal that the demand profile that they've continued to express to the street in quarters past is still there, and not just still there, but has even more room for growth, even with some of the international implications that investors have had to factor in?
Yeah, so Brad, I mean, I think that Jensen Huang announcing that they're opening up their platform is a head nod to the capacity constraint that we're hearing about from Microsoft and Amazon, and that is we could have grown faster, but for the fact that we couldn't get chips, and there's an infrastructure issue. So I think what I'd like to hear is that the company continues to innovate and they continue to adapt to the constraints, I'll say, that we're getting out of the administration. So we expect in the second half, you will see the newly redesigned China chip adding to growth. And so I expect to hear a little bit about that. And then because input costs are up, I'd like to hear something about, okay, if margins are in fact down, are they compressing overall, or is this a short-term blip?
Nancy, I want to switch gears a little bit because we have Apple shedding more than $100 billion in market cap at the market open today after the president threatened a 25% tariff on Apple if it doesn't make iPhones in the United States. Apple is obviously down year to date at the moment. How are you thinking about Apple? Is it still investable?
I do believe it is, Madison. I mean, it was our largest holding for many years, and then as it continued to depreciate, we sold it down. And so we have what we would consider a minimum position of about 2%. And that's largely because I think we're waiting to see what's important to us is what they're going to do with AI. And so we think there's better places to be adding to at this particular point. But I will say this, I think this is silliness. I mean, this is what we call industrial policy, but usually industrial policy comes with incentives. And so, governing the private sector via Truth Social feels really uncomfortable to me. And I think if the shoe were on the other foot and someone told President Trump he couldn't build golf courses in Scotland, I think he would have a very different view of the situation. It is ridiculous to think that Apple can move all of their manufacturing back to the United States. It's also ridiculous to think that consumers are willing to pay the $3,000 to $5,000 estimates for an iPhone if they are built in the United States. Stepping
on golf shoes with that one, Nancy, here. As we're thinking about this broader market, and we've moved off of some of the levels where 80% of the market was trading below its 200-day moving average. We're now back to, and we have been in kind of a 50-50 or at least 60-40 territory here for a week and change now. So at this juncture, what areas of the market are perhaps best positioned to even outperform the Mag 7 as you're kind of looking at where we're going to see this market be led by for the remainder of the year, the balance, even as we're waiting for the negotiation to net out for some of these trade deals?
Yeah, that's a great question, Brad. I would say what we did during March, April, was we added some new names that we thought were somewhat impervious to tariffs. So on your previous segment, you were talking about the retailers. We added to a position in TJ Maxx, which we should have already owned, but best managed retailer, I think, discount retailer, buying inventories that are already here. That's important. But we also added a name like Accenture, which is, had a very difficult period. We picked it off at lower levels, which is what you want to do. And we think they're going to be in the sweet spot of adapting old economy companies to AI. And then you want to own the software companies because they too have very modest exposure to tariffs. So think CrowdStrike, Palantir, Microsoft, ServiceNow, which has beat and raised over the last couple of quarters. I think that Snowflake, that's where you want to be exposed in the next round of the AI revolution, and that's important because if we are in a decelerating economy, you want to own the reliable growers, and these companies have demonstrated in 2022, 2023, 2024 that they can deliver reliable earnings growth.
Nancy, final minute. When you think about the Mag 7, the basket of those magnificent 7 stocks, how are you thinking about how Apple impacts that basket? And especially for our audience of retail investors, can they rest on their laurels of investing in Mag 7 ETFs if Apple's still in there?
I do think so, Madison. I mean, usually what happens, we run a 12-stock portfolio, and what happens is you've got one stock that doesn't do anything for a year, and then it carries the day the following year. So I think Apple's done the heavy lifting for quite some time in the Mag 7. Maybe they can hand it off to, Amazon, which we love at these levels, and apparently so does Bill Ackman, and also, or Tesla, which has come back, from the ashes. So I think you can be comfortable there because this is not the 1990s internet company. These are companies with robust balance sheets, lots of levels to pull. Microsoft demonstrated that in the last quarter. Nvidia is opening up partnerships with all of these companies. So I think you can still own those names for some time to come.
Nancy, good to see you. Thanks so much for taking the time here with us.
Thanks for having me.